So today I'm going to talk about a brand new UK stock I have started buying. I started buying this stock around about the start of July, and today I'm going to tell you guys about that stock. It's a stock that offers a bit of a value play, pays a bit of a dividend, and also normally has a growth, although it is going through a bit of a tough time at the moment. And as we know, the best time to buy quality stocks is when they are going through a tough time, and hopefully this is a tough time and they bounce back from it, and that is mainly the reason why I am buying this stock. It's a stock that has had a profit warning, and hopefully over the long term that stabilizes and the stock goes back to performing very well, and historically it has been a good performer. Before we do go on to this new UK stock I have been buying though, I just want to give a quick shout out, and that is on the Patreon. I have just done a video on Catebox and their earnings that came out this week. I thought they were very strong earnings, and if you want to see my full thoughts on Catebox's earnings, you can go watch it on Patreon if you are a Patreon member. If you don't want to become a Patreon member, you can just buy the post for £3. The link is in the description. Or if you do want to become a regular member and watch every exclusive video on there, support the private group, get to know what I'm buying and selling in real time, and also talk to 600 members on the Discord, including me, you can become a member. To become a member, just unlock the membership, and you can either pay monthly, which is £6, or you can pay £5 10p, which is the price of a coffee. Not too bad at all considering all the information that you do get on there. But apart from that, let's get on to today's video and the new UK stock I have been buying, which is Bytes Technology Group. And you can see here, whoosh, there is the profit warning. It was a pretty substantial fall from Bytes Group, and you can see here this stock only at the start of this month was a £5.12p stock, and now it's a £3.38p stock. So when the stock had this dip, I had a look and I thought, you know what, I'm going to buy here. I quite like the value and the risk to reward here, so I'm going to do a starter position into the company. Now, the stock did IPO in 2020. Since then, the stock is basically flat since it IPO'd 5 years ago. That does mean at the moment the stock is 15 times earnings and does pay a 2.95% dividend yield, although it does sometimes pay a special dividend. The special dividend pushes it up to, I believe, a 5% dividend yield if that is paid, so it could potentially be quite a chunky dividend if they do continue to do the special dividend. Now, overall, what does the company do? And then we'll kind of get on to the negatives of why it dropped, and then I'll also talk about some of the positives here. So it is one of the UK and Ireland's largest IT resellers, with many decades of vendor experience and trusted based customer relationships, and they do have two companies here, one called Bytes, one called Phoenix. So the best way to look at this is that they're sometimes going to private companies or even public companies, and they'll go into there and help them select what they are looking to do with their IT, suggest what they want to have happen to their IT with the likes of cybersecurity, for example, the cloud management for data storage, and then they'll also help with the sales and then the procedure of how to get it installed into the company that they are operating in, which is a pretty significant growing area and should be a continued growing area as companies do look to every year spend into the IT side of the business and continue improving the IT supply of the business. Now, the company was hit by we'll come back to that in a second. So the reason why the stock did drop is they did do a profit warning. They did do it through an AGM statement, which I was like, not a fan of this. I always think, they're hoping that people miss it. I'm not going to miss it. So I don't know. I don't know why they just didn't title it, a profit update or trading update. But yeah, it is what it is. So they said that trading across the first months of the year has been impacted by a challenging macro environment. I never like it when they blame the macro environment. There's so many companies out here that are still doing okay. I don't like it when they do the macro environment, leading to some deferral of customers' buying decisions, particularly in the corporate sector. For the first half, the board now expects group gross profit to be similar level to last year and operating profit marginally lower, followed by more normalised growth in both metrics in the second half. So they are saying here, look, we believe it's a short-term impact and we'll get better at the end of the year. I don't like it either when companies do that. They obviously, when they say that, it's like, we hope they get better. We don't know if they are going to get better. But in this case, I do believe that, okay, this may be just something that has been impacted with the macro environment and also some change inside the business. And then it does start stepping up, because I can't see how the company has dropped off from where they were a few months ago, with gross invoice income up 15%, gross profit up 12%, earnings per share up 16%. That was just on the full year results in February. I can't see the company completely falling off that much that quickly and not coming back from it. And as we know, like, they're an IT supplier, so the companies will need to continue spending money to improve the IT systems inside the businesses. Now, they also did point out to the Microsoft incentives at the moment, and that is one thing that does make me nervous with this company, is that there isn't much of a moat on the business. They are basically, a reseller. They don't really have that much of a moat. They rely on other people to go, we can sell their products. And if any time the reseller or the company that owns the product turns around, especially Microsoft, for example, that's a big weighting on the revenue, and they went, oh, you know what, you got to do this now, that could impact them a little bit. And that's a point here where, for me, this is more of a shorter term hold than what I'd normally say. So normally I say 2 to 5 years, but I'm not going to the 5-year side with this one, just because they don't have a great IP here. It's more of a point of view that there's a profit warning. I expect it to rebound going forward, and because of that, that's why I'm actively buying into the stock at the moment, and it will improve. They also said that they also made some changes in transforming the corporate sales team as well, and that's also impacted them. So hopefully that is something that is passed going forward. Now, that sounded quite negative. So what are the positives? So it was a pretty significant drop in the share price, and for me, when I look at the stock being down 38-40%, that is quite a significant drop. Imagine something being valued 40% loss less than what it was 2 or 3 weeks ago. That's a significant drop, and for me, it's pretty overdone, because when I look at someone like Bytes Group, what we have here is a company that was previously financially doing really well. Look at the full year highlights from last year; they were all very good. Special dividend up 15%, as you can see here. Ordinary dividend up, net cash up, the gross income up, operating up, earnings per share up. All the numbers looks like they were going up in the right direction. So for me, this is looking a bit like a blip, and also historically, this has been a very good performer. You look at the financials from 2022, 146 million, 184 million, 207 million, 217 million. And if you look at the profit, for example, as well, 19 million, and we're now up to 54 million as well. And hopefully after this year, that carries on increasing. So this company's historically grown 10% a year, revenue, bottom line. No issue there. And that's because of the company sector that they operate in. When we look at what they currently do, and they are reselling some of these products like cybersecurity, when we look at the cloud side of it, the AI side of it, companies are going to have to keep investing. They're going to have to keep investing into the IT side of it, and there might be a little bit of a cautious step back of, we're going to see what happens with this macro environment, tariff situation that might have happened, and how they spend on it going forward. But at some point, they have to keep improving it. You can't fall behind the pack, and that would come to a point of view where we look at Copilot, one of the major growth drivers going forward. And if companies want to get more exposure to AI, more exposure to Copilot, that is something that is growing at a 10x growth at the moment. So there's potential for them to, for the next 5-10 years, go into that selling department. And that's not forgetting other things like the likes of the cloud, Azure. That's still a major growth driver. Maybe it's coming down a little bit as the explosion, but it's still going to be a major driver for them going forward. And granted, this is the US cybersecurity market, but the point still stands. The cybersecurity market is still a space that's going to grow and continue to grow, and if anything, probably would grow faster, because we've seen the impact that has happened with cybersecurity. AI is probably going to make that more significant, that companies are going to have to spend more money on it. And we've seen before the awareness that, if you are hit by one of these cybersecurity incidents, how much damage that can hurt your business. You only have to go look at Marks and Spencer's and the Co-op and see how much a cybersecurity attack can, majorly hurt your business. So companies are going to have to keep investing into this at some point. And my thinking is Bytes will be a beneficiary of this situation if this is going to happen. The other thing as well with this business is, like I said, it is now, 2026, so much on what we can use on those numbers. But if we go to 2027, 13 times forward earnings. So 13 forward times earnings is, for me, for a company that would grow around about 10% a year, that's a pretty good, attractive valuation. Don't get me wrong, I would like it maybe slightly lower, 9 times, 8 times earnings. That would be absolutely amazing if we get there. But I don't know if we're going to get there. So that's why I pulled the start position, because I thought at the end of the day, 13 times earnings isn't that bad at all. Like I said, we do have a 3% dividend yield, add the special dividend on top, you're getting up to a good 5% dividend yield as well on this one. Financial health wise as well, it's a pretty cracking balance sheet here. You can see here, it's a clean balance sheet. And on cash point of view, they sit on 113 million of cash. So that's over a good, nearly towards 15% of the market cap on cash. So you can, when you're working your numbers out, for you guys that like knocking the cash off the market cap and and the clean balance sheet, you get bonus points from that point of view as well. And obviously with the cash, they can go do those dividends, special dividends, share buybacks potentially, acquisitions. They do mention that they potentially look at an acquisition point of view, and as well, it's a very profitable company. Like, this isn't a company that has a thin amount of profit margins here. You look here, the company has significant 25% profit margins. Every year, this company is throwing off 54 million in cash. So that profit there is able for them to, once again, acquisitions, share buybacks. It's a very strong balance sheet. So you get bonus marks for this balance sheet and the profit margins they have. This is normally a pretty nice valuation for a company that does these sort of levels here. The only thing that I will criticize on here is that there has been no insider buying after this drop, which makes me a little bit like, why are they not buying? Because like the CEO, for example, bought in August time and they were willing to pay £5 a share. So if it is a short-term blip, why are you not buying at £3.39? Wouldn't that make sense to buy? So that's the only thing that's made me a bit nervous about buying any more at the moment. But I think the next time they have an update is around October time. And in October time, we'll see if the results do strengthen, and if the share price stays stagnant, I'll buy more, and if it goes up, I'll have a consideration, okay, I might move away from it. And then if it comes out in October that actually these results have not improved as they said they would, or it's actually got worse, and I'll go, well, that's why the insiders didn't buy, and that's when I'll probably move away from it. It probably will end up being a slight loss, but that's what I'm kind of waiting out for at the moment to give me. This is what I like doing with these stocks, is I buy a start position and I see if the fundamentals improve, and especially if the stock stays at the same price, that's when I start buying into it. And if I get a bit nervous about, actually this isn't moving in the right direction that I was hoping to do, I move away from owning the stock. But you can see here, for the risk to reward here, I am starting to start nibbling away at this stock. So when we do look at some numbers here, I've put 5, 7, 9% revenue growth in. Profit margin around 23 to 27 profit margin. So some decrease factored in the lower numbers, some expansion factored in some of the higher numbers, and a 20 times earnings multiple, because I think a company doing these sort of numbers with those profit margins and a good balance sheet, 20 times earnings is about okay for a company like this, especially when you look at the PE history. This company previously 46 times earnings, 33 times earnings, 26 times earnings. So this company has historically been way above 20 times earnings. So even a 20 times earnings multiple to me looks a little bit more cautious around what it has historically traded at. And then 20 times earnings, as you can see here. So on the low side, 47% upside. So that's still for a far lower number than what they've ever grown at before, and profit margin shrink factored in. We're still getting some okay upside there. Mid side of 72% and on the high side of 100% upside. And as well as that, remember about dividend, 3% yield, special dividend pushes up to, I think, a 5% dividend yield. So if we say over 5 years, 25% return from that. Add 25% on the mid side and 25% on the high side. Yeah, you can see here that I'm getting the 100% return on those mid side numbers and on the high side numbers, which is obviously really attractive. Now, ultimately, the wild card here is if we do see the company not only go to 20 times earnings, we do see it go to a bit more of a premium, and that AI side of it takes off really well for them in the sales side of it. That's where we would see a really big return from it. But like I said, I don't always like factoring in like the perfect scenario here and frothy numbers and frothy valuations. So on more of a cautious side, there's still some okay upside here. Probably better than an okay upside here. So yeah, I started a position. I'll wait until I get a little bit more update on either what would make me a little bit more bullish is the insider buy-in, and also what would also help me is the update in October to say, look, we are seeing things get a bit better. So until that point, I am being cautious around this new position, and but I thought I'd let you know that I have built a start position into it, and I will see when they do the next update, which I believe is in October, or we see some insider buying that will hopefully encourage me into the right direction where I add more, and we'll see what happens. As you can see, there's definitely, you can see the reasons why this stock has dropped 30-40% at the moment, but is it overdone or is it more of a lasting issue? We will see. So that's where I'm at with this one anyway. Hope you enjoyed the video. As always, guys, have a great weekend. I will try do another video over the weekend. It depends how much time I have, and I'll also get a few more exclusive videos to you guys on the Patreon as well over the weekend. But apart from that, thanks for watching, and I'll see you when I see you on either Sunday or Monday, guys. See you in a bit.